Let's just confirm here real quick. Yeah, we should be live now. Perfect. Okay, cool. Let's get started. I won't record it on our Zoom because then we already have the YouTube one. So I'll just post that onto school as well. Alright, perfect. Good morning, guys. We have quite an easy day right now in terms of economic data points. We're preparing for any headlines that might come out later today. Just any updates with, US and Iran. And then also preparing for tomorrow's PCE. Alright, we've got that. So tomorrow we're expecting that we're going to get a bit of an increase of 0.3% compared to the previous of 0.2%. Final GDP is also going to be coming out quarter by quarter, and then you also have unemployment claims that's going to be coming out. So that's the main day for this week, which is tomorrow. We're going to prep for that. We also, let's take a look. Yesterday in the market update, we're pulling up articles, and one of them was about Bank of America, where we saw that Bank of America has completely switched their thesis, where they were expecting that there was going to be at least one rate cut, or they switched it to, we're going to get a hold throughout the end of the year, but now it has made a complete flip to they're expecting 3/4 point rate hikes going into the end of the year. So total 75 basis point hikes that they're expecting by the year end. One in September, one in October, and then another one in December. Deutsche Bank is also pretty much in the same exact direction. They think that they're going to get, at least 2 rate hikes. So, quick little recap. But yesterday, we had big movements in the market. If you guys have been following, Nasdaq, S&P 500, just tech stocks, and then also, US 30 a little bit as well. US 30 is kind of the more resilient one out of the three. But yesterday we had big movement that started off with South Korea's 10% equity shock. And then we had that move kind of trickling over to the rest of the Asian markets, and then going into London session and also into New York session. It was the match dropped into a market that already, is stacked with the leverage, the crowded winners, and very little room at this point left for disappointment when it comes to a lot of the earnings. Today, we also have earnings coming out from Micron Technologies after close, which is also going to be very important for Nasdaq because, it has to do with the AI narrative as well. So we're going to continue watching for those. But yesterday was more like an aggressive skimming of 6 months of that accumulated movements and the big pushes, or the accumulated froth in the AI infrastructure names, than just a whole rejection of the broader AI build up itself. So those two outcomes, it's not telling you that there's going to be a whole risk off sentiment in the market, or that you're completely looking for massive sells. It's just that we've had this massive bullish run up all across equities due to AI. So all eyes are glued there, just waiting for any cracks in that entire narrative for some pullbacks. Instead, what we're seeing is that, of course, there's capital rotation that's happening, but it's not capital rotation out of equities completely. It is out of those rate sensitive, high multiple stocks into more like industrial stocks, financial stocks, and also into more just economic supportive type of stocks that we're looking at. Bonds and the dollar yesterday caught a bit over that as well. Let's pull up DXY. You got a nice bullish run up on DX as well. DXY, the dollar index. And then I'm pretty sure a lot of it must have trickled over to crypto as well. So let's pull that up. Yeah, so we're starting to get those sells over to the crypto side with Bitcoin and gold also selling off. Gold has now broken the weekly lows as well. So that combination right there, if this was going to be a clean growth scare, that fear that the economy itself is weakening, then you would expect that bonds would rally, gold will rally as well, with the safe haven assets just continue to push back up to a safety. And if this was more like an oil shock, because of over the weekend we had Strait of Hormuz essentially being declared as quote unquote closed again by Iran. But then, they ended up coming with some peace deals or with negotiations and making progress on those type of talks. If there was any sort of oil shock around that, you would expect a complete different, cross-asset movement. That's basically what would have happened. What we're getting instead here is more like a broad reduction in risk appetite across every asset class simultaneously, which is your typical textbook style of like forced deleveraging in those crowded trades. So it's not, a reassessment of the economic fundamentals, but that's just more of like the forced deleveraging events that we're looking at. Because once the leverage is flushed out, then, you can stabilize faster and you can have those genuine movements as well. So that's exactly what the market seems to be doing, this morning too. So let's go over the technical. We'll go over some headlines and then we'll pull up financial juice and Forex Factory and look at economic data points as well. So that way we're not missing out on any sort of moves as they're happening. We've got the first 15-minute candle closure on the new hourly, so it should start giving us, good direction on where we're headed. But in terms of the weekly, looking at our range, we have our candle body open at 51,400. We still have our top wick rejection from this week at 51,900, and then if price can continue breaking past that, then we're going to target last week's top wick rejection into 52, almost 300 area. Drop down to the daily time frame, you start to see a lot of consolidation here, so that's another thing to note. As price is trying to find its direction, it's tapping into these all-time high levels. We're talking about right now a lot of forced deleveraging and all that stuff that's happening. We just want to be really careful. It's also pre-positioning right before PCE comes out tomorrow, which is going to be very important because that's going to tell us how aggressive the Fed is essentially going to be to combat inflation and with their interest rates as well. Are we truly just seeing 1 to 2 rate hikes, or are we actually going to see that 75 basis points? Right now, it's just Bank of America who's really coming out with 75 basis point thesis. But the market, eventually if we see that starting to catch up to that, then we're already going to have great opportunities that we can take advantage of rather than just scalps. You'll have scalps that can turn into day trades, swing trades, as long as you understand that divergence between what the market is pricing in right now versus, what are we really expecting that the broader sentiment is going to be like going into the next couple of weeks and potentially as we get closer to September as well. So on the daily time frame, there's nothing else I would really map out here, just the fact that we're sitting in consolidation, so we just want to be careful here as well. And then on the 4-hour time frame, we're coming back up. It seems like we're rejecting into these previous resistance areas, so nothing to map here either, but we are going to start narrowing in our zones as we drop down to lower time frames. So looking at this, what I do see is previous resistance area right here, and then price, pushes back above it. So if price can continue closing above this area, we can look for those continued buys to the upside. Just understand that these are going to be your quick moves. You're looking for quick scalps, just taking advantage of the volume that's in the market at the moment. If not, I want price to drop below this 1 hour support area for this consolidation. Nothing in between, but as soon as it drops below that, if we hop back up to the 4-hour time frame, that is also a previous 4-hour resistance support area right here as well. So if it drops below that, we're coming right back down into this next support area down here. When we come down to the 30-minute time frame, we see a lot of consolidation right into that zone. So at the bare minimum, even if you're trying to look for a quick move down, something like this, you're looking at about 91 points to about 132 points that you can catch. Same exact thing here to the left. If price continues to push back down, you're starting off with about 70, continue down to about 108 points to the downside. So nothing in between. What we're going to do is wait for some candle closures. On the 15-minute, you got a strong 15-minute candle closure here. On the previous one, drop down to the 5. This is where you're testing volume. So when I say you're testing volume, I'm basically saying that you're waiting for strong candle closures here. The last one was bullish, but it wasn't strong enough that it could break the previous highs. So what you're going to do is create an alert right at 51,830. Let price create a bottom wick, continue pushing back up bullish, and you're catching your couple of 100 points to upside. You're catching about, not even a couple of hundred, this would be more like starting off with 40 to about 68 points to the upside. But what you want to be careful of here is that there's a lot of consolidation that's going on. So what I would do personally is just wait for price to pull back a little bit deeper if it wants to continue pushing back up bullish. So I would wait for it to pull back right here and then continue pushing back up bullish. We are sitting at all-time high levels, so just being careful with this pair. For any sells, you have it right below the zone as long as price can continue closing below 51,720 and then continue pushing back down bearish. Let's come over to Nasdaq. We are breaking the previous weekly lows. We are headed straight down. What I'm going to do for now, I'm going to map out this previous support, because if price breaks below this, then we can head right back down. So right now that's about 200 points away. So that's going to be your 80. And even on the weekly, you can see this consolidation. So that should already tell you when you drop down to lower time frames, you're simply looking for a zone-to-zone trade. Drop down to the daily. On the daily time frame, it's already created a top wick. It's breaking the previous lows. It's already in a direction for those sells to continue back down. I'm going to adjust this down just a little bit more to sit right underneath the support, which is the 800 mark. So you have about almost a 400-point move actually that you can catch. When you come down to the 4-hour time frame and you see price trying to break below this entire support area, you wait for your 15-minute, 30-minute candle closures. You look to the left. You have that clean move to come back down from about almost this 300 level down to 110, and then a continuation even further. Drop down to the 1-hour time frame. This would be the first 1-hour candle that's starting to close below here. And we haven't even had a 15-minute candle closure down here yet. So those are some things that you're going to wait for. Also understand that we've had nice bearish momentum to the downside. Even off of the 4-hour time frame, this is a historical area where price tends to consolidate. So what you want to make sure is that you're not getting stuck as a wick rejection here and then a pull right back up bullish. So then, just based off the 4-hour time frame, you can see this clear consolidation. Your clean buys are going to be above 29,600, and your clean sells are going to be after you get at least a 15-minute candle closure down here and then a continuation right back down. Because in a situation like this, it's very easy for price to just give you a 15-minute candle closure down here, and next candle takes you right back up into consolidation, and you think like you've missed out on a trade or that you should be taking those buys. There's nothing like that just yet, right? Just wait for your actual candle closures. You have PCE coming out tomorrow. You have earnings coming out at the market close today. So there's a lot that's happening that the market's starting to prepare for. Right, you just got a massive push on US 30. Me personally, I'm still waiting for at least this 30-minute candle closure. See what's up. See what ends up happening here. Come over to gold, and then we'll go back to currencies. So now coming over to gold, you have this nice bottom wick rejection. 39.69. Candle body open from this week. 4158.6. Drop down to the daily. So on the daily time frame, it's breaking the previous lows. This is where you should be careful because price has now essentially created a new lower low, and you want to make sure that you're not just settling the low here. Drop down to the 4-hour time frame. This 4-hour candle seems to be trying to create support here. Last 4-hour candle, barely a top wick, barely a bottom wick, so that tells me there's a ton of bearish pressure here. Hourly candle already closed bullish, so what we're going to wait for is price to continue breaking above this 4,060 level, and then give me some 30-minute, 15-minute candle closures, and then continue back up bullish. If not, and price breaks the previous 15 low, then we can look for those sells to come right back down here. But understand that as you go up on higher time frames, this will ultimately become consolidation unless you get more dollar strength and a push right below these support areas. In that case, you're going to be breaking below a major support area, and we're going to be coming back down into that 3,800 to about 3,600 level. All right, let's come over to silver. Everything makes sense so far? Any questions?
It's good. Yeah, makes sense.
Okay, perfect. Now, looking at silver, we have our own bottom wick here at the moment. If price continues breaking below this, then we're targeting ultimately down into 54.38. But as of right now, we have 58.2. I'm going to drop down to the daily to get the actual candle bodies here to map out as my resistance, which let's just call it is 63. Drop down to the 4-hour time frame. Same thing as gold. It's starting to hold on to a support here. Last 4-hour candle, also no top wick, no bottom wick, tells you that there was a ton of bearish pressure here already. I'm going to look to the left. I'm going to look at any major support areas here. And I want to see how price is reacting here. So that's pretty close to the current resistance that price is trying to hold on to. I'm going to drop down to a 30-minute, 15-minute. So same thing here. Actually, we can bring that down just a little bit more. If price can continue breaking above this high, above the $60 mark, I'll still give it enough room to give me some candle closures and then continue pushing back up bullish. Then we can take it up into about that $61 mark. If price breaks below these bottom wick rejections, the support area, then we can look for those sells to come back down into 58.2. All right, which currencies are you guys trading? Which one do you guys want to go over? Any update ones that you want from the market update as well from yesterday? I think majority of us are trading just the indices and the commodities this week. All right, cool. Let's just wait it out then. We have about 3.5 minutes left for this 30-minute candle closure. Let's talk a little bit about Micron as well, as those earnings will be coming out. Right there. Okay, so those earnings will be coming out today at market close. So we're going to be watching out for this, and also, you know, how it plays into overall Nasdaq. If we do end up getting that they don't end up beating the estimates, then I am expecting that Nasdaq is going to get another hit as well. So this is in terms of just understanding, you know, specific names that are impacting the indices, and then also in terms of just the overall positioning here as well. If Micron enters, you know, tonight's print at those record highs that we're looking at, with options pricing in that 17% implied move in either direction, that combination, you know, with a record high plus a massive implied move itself, it's going to be the massive story that you're going to be expecting. Is going to be moving a lot when it comes to that specific stock, but also helping move Nasdaq a little bit as well right before PCE. But you also should understand that, you know, if it comes out at record highs ahead of that 17% implied, then that's going to be more of like a reactionary move, not really more like a investment type of decision. You shouldn't really be holding on to that for, you know, a long period of time, as the market will ultimately end up correcting that as well. If you guys haven't already, you know, pull up that VIX article from yesterday as well. That will already tell you how the broader market is already starting to, right here, starting to hedge against, you know, the PCE data points, and then also all these earnings reports that are coming out. Let's come down here. So the options, call options relative to puts, a ratio that has climbed to its highest level of the year, is a sign of increased demand for downside protection for S&P 500. Yeah, so the market here is now starting to fully price in or expect that we're going to get interest rate hikes as soon as October here as well. So if you guys remember me in the market updates in the live sessions talking about, and we even pulled up Bank of America's fund manager surveys, how majority of those fund managers already have no dry powder. They're already fully invested. So this is just another challenge for a lot of those money managers who've plunged back into big tech stocks. Added about 10 trillion value to the equities benchmark. That's left valuations looking stretched and positioning somewhat elevated for mega cap technology shares. So a nice bull case that I can think about when it comes to the earnings today with Micron, and then the bullish run up to keep this going, to keep Nasdaq going to the upside, is going to be more of if I rest on something like more concrete rather than just reactionary or rather than just the sentiment. Micron has guided that its high bandwidth memory capacity is sold out through all of 2026, right? Which removes the usual quarterly guessing game about whether the company can actually fill its production lines. And their management also has said that this generation of memory products ramped roughly twice as fast as a prior generation. So that compresses the time between a new product and actual meaningful revenue that investors would want to see as well. So when you take both of those situations, that is a nice tight bullish structural argument that you can look at, which is separate entirely from the macro driven leverage unwind that we saw yesterday, based off of this article. So the clean way to basically think about it would be the expected beat is already priced in. The market's already expecting that's going to happen. That's been happening with a lot of the AI stocks for the most part in the past year or so. But what matters is the guidance, specifically whether forward revenue guidance and commentary on that high bandwidth memory pricing extend strength into next year very specifically, or whether the management starts to sound any sort of cautious on the volumes or repricing trajectory. So beat with strong guidance is what's going to help us with this massive momentum with that particular stock, and then also with continuing just the AI narrative of AI strength, especially with Nasdaq as well. One thing that I also mentioned in the market update yesterday was that, especially with PMI data points that came out yesterday, don't just read the data points and think that it's strong data points, a strong report, you're going to get insanely bullish momentum right off the bat, or the risk sentiment has completely changed in the market. Understand what it means in the broader market, and then being able to read in between the lines as well. All right, we got a strong bullish 30-minute candle closure here on US 30. Let's hop back up to higher time frames. On the daily time frame, we're starting to break the previous highs as well. We're going to drop down to the 4-hour, check what's happening to the left. So we have been sitting in this massive consolidation since June 17th. I highly doubt that on a day with low impact data points that we're just going to continue with the massive momentum to the upside. What you're going to see here is a lot of wick rejections, price pulling back, and a lot of just pre-positioning for PCE. So that means that be very careful here. What I'm going to do is continue to be conservative in my approach, especially for this pair. I want to see rejections being held here. I want to see resistance being formed here, and then a continuation back down bearish. Now what that does is, instead of trying to chase about a 40 to 50, 60 point move here, if price can hold on to a resistance here, if it can mimic what it has done here to the left, which is just create a top wick and then come right back down, then I have much cleaner moves for about 100 to about 200 point moves to the downside that I can catch instead. So like I said in the beginning of the session, this week is going to be where you're going to be extra patient with your setups. You're going to be extra conservative with your risk as well. Nasdaq is still sitting in this consolidation. Doesn't seem like anyone is trading currency, so we're not going to review that. And then gold held onto a resistance here, pulled back. Previous 15 closed bullish. I'm just trying to see which way this one is headed as well. seems like we might end up getting a better move on US 30 while Nasdaq is still sitting in consolidation. Any questions, anything else that you guys want to go over, any currencies at all? What I actually did want to go over was GBP USD because I did get an alert hit for that in London session. So as of the market update, we're just sitting in consolidation, and then we're waiting for it to break below this area and continue pushing down. So it seems like it has pulled back up right above that. So I'm gonna create an alert right underneath its own bottom wick. If it continues pushing down, we have clean moves for about 120 pips to the downside, catch some nice swing trades. Euro USD is also starting to push back down, but we haven't gotten that top wick that we're looking for in the market update call. So I still want to see price coming back, either holding onto a resistance here and then pushing back down, or pull back deeper up top here. Ideally, that's what I would like for a harder sell to the downside. But a lot of it is just the strength coming from the US dollar. This is also about 100 points depending on your entry, or 100 pips. USD JPY and GBP JPY, we still have the intervention risk here, so we're still gonna continue just monitoring this, both of these pairs, any of the yen crosses. So there has been some doubts about potential intervention that's already happened this past week, or this week, but it hasn't been confirmed here just yet. So that's why we're just continuing to inch even higher up, and GBP JPY is starting to come back down. And you can still see how it's heading into this daily and weekly consolidation areas too. So for both of these pairs, I'm kind of just staying away at the moment because we already have two pairs that are setting up for nice swing trades, and then we have these other pairs that we're looking at for nice scalps and day trades. All right, perfect. We got a bit of a consolidation. Let's get some 5-minute candle closure bearish and then continue pushing back down. But on the 15th, it's already created a top wick. It's flipped. Yeah, that's this one. So you're just looking at the same exact candles, right? And then just pair that up with whatever price level that you're seeing on your broker side. But it should be the same exact candles. If it's different, then let me know. Then I'll pull up, whichever symbol that you have on your broker side. Is it different candles or the same? Basically, so okay, nice. Yeah, just follow the same candlesticks, and then the price is just gonna be a little bit different. We're gonna stay on for another 20 minutes or so. Try to get some movements. Alright, start to get a little bit of a push. We got a couple of minutes left. About a minute left for this 5-minute. So let's see if it can consolidate and then give me a bearish candle closure. So on the 5-minute, this is where I'm looking for a strong bearish candle closure. And then if the next candle can continue pushing down, we take those sells. Alright, we're getting a strong push. That means on the next candle, you can potentially look for a sell, or if you want further confirmation, you wait for another 5 minutes, you wait for the 15 close, and you're just checking for this area to get it clear. 8:30, and eventually you're expecting that's going to come down into like 7:30 area anyways, which is going to be in the middle of the zone. So any of that is perfectly fine that you can catch. I'm still waiting it out a little bit more just to see if it can continue breaking its own low. Place stop loss somewhere up top there, target down here. All the trades this week are going to be just 1% risk that I'm taking. Alright, same thing here. Let's get it to break the previous 15 low. And same thing there. I don't think we're going to get anything for Nasdaq today. We're just sitting in consolidation since yesterday. Alright, gold is getting close. We have about just 2 minutes left for this 15 close. I rather wait for that because the current 15 made a nice top wick rejection, but I would like to use the 15-minute candle top wick to figure out where to place my stop. So if I can wait for another 1 minute and 30 seconds, if I can get, another bearish candle closure, next candle gives me a bit of a top wick. Ideally, I would like to place my stop here and then target down here. Silver, pretty much the same thing. This would be a pretty white stop for where the entry is at the moment. So let's just give it another minute or so. Still waiting on US 30 as well. Best time to trade gold? I would say during New York session, around New York open until about another hour or so. 6:30 a.m. PST to about 9 a.m. PST. So I would say about you have those 2.5 hours where you get pretty good volume. So what I'm also doing on the side here while we're just waiting, we just got a 15-minute candle closure. Alright, this 15 has completely flipped on US 30, so that's why we're still going to wait here. This is going to be your first 15 that's going to be closing above 51,900. You're clearing above this. We're pretty much all solid to continue pushing to the upside. Nasdaq, nothing. Gold, still waiting for a top wick. Let's see if we can flip, continue pushing back down. And same thing with silver. What we need to be careful of here is just those wick rejections and pull back down. So that's why I'm being a little extra patient. But what I'm also looking at here on the side is TrendSpider's sidekick, looking at any unusual activity or institutional trading that's basically going on. We looked at this in the weekly outlook. I had pulled this up and looked at it as well when we were talking about the massive sell-offs that were basically happening over the weekend. We were hearing a lot about it on social media, but a lot of it, majority of it actually, you can see was just the Walton Family Trust, and they have been doing this for about every 2 weeks or so anyways. And then after that, it's pretty normal activity for the rest of the institutions or the insiders. And then let's see here, single quarterly rebalance, any big names, was just one Norwegian fund, and those are the names that they were trading. Just had Sidekick update this to today's data points. We got some new insider sells here. Let's see if there's anything else. I just had it update to, instead of just doing QQQ, also do anything that's in S&P 500, in the US 30, and in Nasdaq. So we'll see if anything different comes out. But it seems like right now, a lot of the sell volume that we're seeing in the markets is just a routine blackout lift. A lot more buying that's actually happening right now. Yeah, so nothing crazy, nothing out of the ordinary that we should be worried about in terms of any massive shift. So I used this data point to look at what are the big names I should be watching out for that are impacting any of these indices that we're trading on the future side. But if you want to pull up like options data points, if you want to pull up like any other data points to continue trading, any specific names, then Sidekick could help you out with that too. My most traded asset this year has been US 30. I really enjoyed trading US 30. I like Nasdaq now too. I'm starting to get into that a little bit more. But this one's a little bit more, it consolidates, it's a little bit more volatile. All of that or US 30 gives me those clean moves. Alright, based off our time frames, nice daily push here. 4 hour, same thing. 1 hour, it's going to close in about 11 minutes. So still just being extra patient. If the next 1 hour gives me another bottom wick and floats back up, there's really not much that I'm missing out on. If anything, I clear out of this low volume section right here, continue pushing back up, got about 81 pips at the bare minimum. If it keeps pushing, you got 164. If it really comes back to its own all-time highs, you have about 208 points that you can catch. So I'm not really too worried about it. I'd rather just not get stuck being a wick or the liquidity right before PCE for price just to reverse back down. Everyone understands the type of setups that we're looking at, or what you should be looking at as well going into the rest of the session if you are still on your charts. For Nasdaq, you're waiting for price to just get out of consolidation here. Get out of consolidation on the 15-minute or 30-minute, give you a strong bullish candle closure, not like this, but a strong bullish candle closure. Next candle either gives you a bottom wick and flips back up and continues pushing bullish, for any buys, or it gives you a break and retest for those buys. If you're looking for sells, same thing. You're waiting for price to clear these wick rejections. But there's about, I would say, 75 to 80% chance Nasdaq's not going anywhere today, besides just giving you some liquidity sweeps, getting ready for PCE tomorrow. Tomorrow's PCE is going to decide whether the market's going to be pricing in 2 rate hikes or 3 rate hikes going into the end of the year. If it comes out hot, if it comes out higher than 0.3%, if it comes out to 0.4, 0.5, the market's already on the edge, ready to price in 3 rate hikes. I think you would have much better movements on US 30, just have to wait a little bit more. You got about 10 minutes left for this hourly candle closure. Alright, gold is now starting to push. New 15 has no top wick, but on the 5, we're starting to continue to push. Let's see if we can break its own low. Take some quick sells. Still understand you have about 8 minutes left for this hourly candle closure. But on the 30-minute, we held onto a nice resistance. Absolutely. Have a good one, guys. So we have about 9 more minutes that we're going to stay on for. But make sure you guys understand the type of setups that you're looking for the rest of the session. If you have any questions, please just message me on Discord too. So this first 5-minute candle that closed outside the zone, no top wick. So it didn't really leave any range for the next candle to continue pushing, which tells you that there was a ton of bullish volume in the time frame that it closed out. Next candle, a little bit of a bottom wick, but I left a nice little range. And then this current 5-minute, again, is also no bottom wick whatsoever. So there's a ton of bullish momentum here. Just make sure that you don't get stuck being the liquidity for the other side. Alright, US or gold is starting to get a push. Let's get a little bit more. Place the stop loss there. TP down here. Just want to see a little bit more, just clear these wicks here. Give me some volume to the downside. Just also being cautious, the fact that the current 15 has no top wick. You're coming to an hourly candle closure, which means that the next candle also needs room. Ideally, we want to see those top wicks. Those top wicks tell us exactly where to place the stop loss. Alright, start to push. And just got about a minute left for this 5-minute candle closure. So waiting on that. Silver, pretty much same thing. You're waiting for these wicks here to be cleared out and then continue pushing. And then nothing in Nasdaq. US 30, still waiting this one out. We're clearing outside of that low volume area anyway. So if we can get a strong candle closure right here. Next one gives me a bottom wick. It's very important that I get some sort of bearish candle closures here, at least on the 5-minute, or a bottom wick, and then push back up, because that's what's going to give me a clean movement to the upside. So last couple of seconds, we're just rejecting off of this area here. This is what I want to see. If it can clear, there's nothing stopping this from coming all the way down. So when I see a setup like this where I'm seeing, obviously waiting for price to continue breaking the lows, and then even the last couple of seconds, it's failing to just continue to drop and give me some volume. And the 15 has no top wick at all. This is where I want to be extra careful. Layer on top of that, you're in the final 5 minutes of an hourly candle. Yeah, Nasdaq is just going to consolidate in this zone. It's not going to do anything today. All right, silver, we're getting close. Let's bring it down a little bit more. And gold is pushing. I'm gonna wait it out. Okay, we're in the final 4 minutes of our session as well. So basically what I'm looking at with the thought process here is even going off of higher time frames. We've had a nice support formation off of the 4 hour. We're bouncing off of a strong weekly support here as well. Drop down to the 1 hour time frame. We've held onto a nice resistance. It's starting to push back down. Bare minimum target is coming down into 39.80. Drop down to the 30. You got a nice strong resistance formation. A nice top wick rejection on the current 30 as well. We're clearing these wicks here, which is that bottom wick on this 30, which we saw as, these two candles. We're trying to clear below it. We're still kind of close to this area. I'm testing the volume to see if it can continue pushing. I'm not seeing strong bearish candle closures here or movement. I am seeing, that obviously there's seller's pressure, given that this candle has no top wick. It closed almost at the bottom of its own range. Same thing on the previous one here, but I'm seeing that price is starting to react off of this area. So what I want to see is some wick rejections going into the new hourly candle. Obviously, it needs some volume to continue creating that top wick that it needs, and then continue pushing back down bearish and take those sells. My point is that I want to see a tighter stop here now that we're already sitting at kind of a lower low formation from higher time frames. Daily time frame already creating a lower low down into this range. So on the 15 minute, 30 minute, I want to see a bit of a retracement and then continuation right back down. So on the 5 minute, as I'm testing volume, I want to see that retracement back up a little bit more and then continue to drop back down, take those sells to the downside. Same thing with silver. Silver has much better structure, but it has a resistance and it's creating those lower lows and lower highs. Right now it is stalling out. There is consolidation to the left here, obviously, but same exact thing. This hourly candle or the next one also needs enough room to create a top wick to continue to drop back down bearish. US 30, massive bullish run up. That is happening here. We're starting to push back up. You still have about 280 point range that you can still catch, about 100 points at the bare minimum. I'm still just being a little bit more patient. You have 2 minutes left until this hourly candle closes. A lot of times it will give you massive wick rejections. For example, this candle here, which had a nice sell-off, and next candle had a massive wick rejection. So just trying to avoid a setup like that where you end up buying at the high and then you can't even have a type stop loss. You're basically just going for a one-to-one, going for about 100 point, stop loss, 100 point TP doesn't really make sense, at least for me. So what I'm going to be looking for here instead is get some strong candle closures as they're happening right now, and then get some pullback, a bottom wick rejection, which is going to tell me where to place that stop loss, drop down to the 5 minute time frame. You are still in a high volume time for at least another hour or so. So get some bearish candle closures, support formation. As soon as that support is formed, next candle's breaking the highs, you look for those buying opportunities to the upside. For gold, my support resistance is, this is my weekly range right here, 4158.6 and then 3969 area, which is that previous weekly support. So you can just hop back up to the weekly, map that out. And then this is my previous resistance area here on the 4-hour time frame, just trying to see if price will continue breaking above that. For the current trades, since we are in that downtrend, you just got the new hourly candle formation right here. I'm mapping out if price can continue giving me a top wick and then break the low right here and take those sales to the downside. That way I get to have a tight stop loss, drop down to the 15 or the 5, pull back a little bit more, which is what's going to give me the top wick, hold on to a resistance. Stop loss right here, TP down here. I haven't taken the trade, but I'll just show you what I basically mean. I want a resistance formation there, price breaking its own low. So I want some, bullish candle closures, bearish candle closure, pushing right back down, stop loss around there, and TP all the way down here. Should give you about 5 to 1 risk to reward. Let's say even if you need to do a little bit wider, you still get a 3 to 1 risk to reward. With the US 30, I want to see a pullback. If I'm looking for buys, I want to see price pulling back a little bit more. Let's say somewhere around here. Give me a tighter stop loss, so it needs to have bearish candle closures, and then a bullish candle closure to push back up bullish, and then hop back up to the higher time frames. Look to the left, and bare minimum, let's say right here, you still get a 4 to 1. If it comes all the way up top here, you got about a 6 to 1 trade that you can catch. Awesome. Sounds good, everyone? Any questions?
Good.
Perfect. All right, on YouTube, I will see you guys for the next weekly outlook over the weekend, and then next week also the Wednesday live session. And everyone who's trading with us, I'll see you guys for the market update in the evening.